Hi, everyone. Welcome to the Real Estate Private Equity Show. I'm your host, 𝗖𝗣𝗶 𝗖𝗽, and I'm joined by my co-host, 𝗖𝗣𝗶 Biniaz. Guys, we're really excited today. We have an amazing guest on the show. But first, if you could please like and subscribe, as it helps us build our channel and allows us to keep bringing you great expert guest speakers and great content.
Yeah, absolutely. I mean, I know you guys really want to hoard us just to yourself and not let anybody else find out about this great YouTube show. But please like, subscribe, share so people know we exist. We know we work hard to bring you great guests and we put our time, and the show is not monetized. So yeah, just you liking and subscribing, it is a huge
mean a
help
lot
to us,
guys.
means a lot to us.
Yeah, and guys, we have an incredible topic today. We're going to be talking with Jason Yarusi all about health, wealth, and happiness through our favorite multifamily investing. So we're really excited to dive into that.
Yeah, I'm excited because he's also, they're a power couple, him and his wife, and they manage a real estate investment firm. They got a mastermind, they have a podcast. They're very much actively involved. I see some resemblance between the two of us. So can't wait to get interview him and have some fun, maybe make some friends and get to meet them in person one day.
Yeah, absolutely. We can go on a double date.
Yeah, absolutely.
So why don't we go ahead and let our audience know a little bit about Jason. Jason is an active real estate syndicator and a real estate investor. And Jason and his wife, 𝗖𝗽, founded Yarusi Holdings, a multifamily investment firm that has acquired over 1,400 units valued at $160 million since 2016. That's incredible. He's an avid ultra runner and workout enthusiast, and he also hosts the Multifamily Live podcast. Waking up daily at 4:32 a.m. I love it. I can't wait to talk to you about that. And he is also an aspiring ukulele player. And most importantly, a father to 3 amazing kids and also a husband. So we believe this interview with Jason will bring value to investors looking to learn the balance between life, business, and health. So let's dive into things. Welcome, Jason.
Thank you for having me. Great to be here.
Awesome. I think you beat him by 2 minutes waking up every morning, right? Because you wake up before me at around 4:30.
Oh, nice.
Yeah, I wake up before the rest of the world wakes up, right?
You guys are part of that 4:30 club, or whatever it's called.
5 a.m. club, but a little bit sooner than that. Jason, let's start off. Can you let us know, talk to us about your background and your start in real estate? That'd be great, please.
Sure. So again, thanks so much for having me on the show. My name is Jason Yarusi. As mentioned, my wife, 𝗖𝗽𝗓, and myself run Yarusi Holdings, a multifamily investment firm. We're now based in Tennessee. We met actually working in bars and restaurants. We met back in 2003 and spent about the next 7, 8, 9 years really building up a very proactive New York City bar. I opened some restaurants and some breweries that I sold in New York City as well. 𝗖𝗽 had traveled, gone out to California for a bit, came back, and eventually early 2010, 2011, we became a couple. That was the start of our relationship. So we had a long time actually working together before we became a couple. Fast forward, Hurricane Sandy was a huge storm that happened on the East Coast. My dad has a business that's very relatable to flood zone properties where he lives and moves houses. His business basically 100x'd with the number of calls and number of leads that were coming in because of this storm and all the damage that had happened to all these poor homeowners. My brother was working for me at the time in New York City. 𝗖𝗽 and myself, we decided to move out and help out with the family business. So that's going to Cubs 2011, 2012. Went out there, was really great to help Dad see through his vision of really help grow the company here. But ultimately, I had never gone in that direction because it just wasn't something that I wanted to do. It wasn't my end run. And what I found out very quickly is 𝗖𝗽 was now pregnant with our first kiddo. And we wanted to be able to have back our time when we wanted to. Well, bringing a kid into the world, I just realized that everything I was doing was led by activity, having to do to get, right? So whether it's in the bar you're working for tips, right? So where you go into construction, you have to do to get, right? It was that part of just activity of service to be able to go. And if you stop for any reason, well, so does your money, so does your revenue stream. Plus your time is dictated by other things, right? Outside your control. The bar at certain hours, you have to be there, of course. And then construction, typically is a day project at other points, and there wasn't time that we could get back. So we kept asking ourselves, well, how are we going to accomplish this mission? What is it? What are we going to do? And real estate became a topic that we kept coming back to. So we did what we thought at the moment was logical is Peely got a real estate license, and I started finding flips, and we started flipping houses, wholesaling houses. And it was that moment where we had gotten ourselves into real estate, but
What year was
quickly
this?
learned.
What year was this? What year was this?
2012, 13-ish, going into 13. We realized pretty quick that here we are, really active in construction, still helping dad. And now we took on a bunch of roles that were just more active things, right? So we're doing active on top of more active. And so going from having no time in the day to less time in the day, because everything we're doing currently is now concurrently running with all the flipping and the wholesaling. So we're going further away from that narrative here. We now have our first kiddo right now. So we're going to 2013, 2014 into 2015. Lo and behold, here we are going further away from that goal. And it took Peely, right as she's now pregnant with our second kiddo, meet someone who's investing out of state. We said, well, what are you doing there? And it was basically buying properties, having a team fix them up, having them rented, have a property management company help make these properties perform. And it was that light bulb moment where we said, okay, that seems like an avenue here where we can create some kind of passivity into our environment. We had done a lot in managerial roles, a lot of other points in the past. So we started down that process. And lo and behold, it was great, right? But the caveat there was that you're doing duplexes, triplexes. It wasn't scalable to the point that it was going to accomplish enough to be able to get us out of the run-of-the-mill activities that we were doing day to day. And I came upon, whether it was a podcast or someone speaking about it, large multifamily investing. And that was the aha moment where I said, if I can use everything we're doing on these smaller properties and all the pieces with running large businesses and transform that into what people are doing with this large apartment investing, that will be the angle we need to go to. So we sold off those small properties, went all in with large multifamily investing. This was in 2016. Into 2016, going to 2017, we brought our first multifamily property, a 94 unit, in mid 2017. And that's now led us to the path of all the projects we've currently worked on in the last 4 or 5 years now, including about 50 million in the pipeline of projects upcoming as well.
Awesome story. No, thanks for kind of going over the every milestone. That's great. So I see what I noticed that you talk about, like, investing out of state. That's kind of something that my background is in construction, real estate development, and I was so used to investing right in my backyard, particularly the city that I'm in, because I knew everybody at the city hall. I knew all the contractors. I knew the market very well. So it was I was very reluctant to even invest in a neighboring city. But when I learned more about this concept of real estate private equity, when you're dealing with investors' capital, you want to bring the best possible deal, the best possible yield, and the adjusted risk return for your investors, and that might not be possible in your backyard. So kind of that idea of looking outside the box, and in our case is looking into a different country and where you're dealing with taxations and many other things. So I that definitely resonates. Now you leave the kind of the business you guys are in, which is the bar and restaurant business, and now you focus on real estate. Now you particularly make a focus on multifamily and this concept of private equity or syndication. At the time when you're researching investing in larger assets, are you also concurrently looking at raising private capital, or how are you going to buy a institutional quality asset? Is that something that comes in your radar as well?
It is, because we said, well, how are other people doing this successfully, right? So how are other people just like us going out there where you think it's just a bunch of REITs or other large players that are able to do this? Well, how are these other people who are just like you and I going out there to buy these large apartment buildings? Well, they're using syndication where they're pulling capital from investors, namely at first, friends and family, so they can go out there and buy these larger properties and everybody can benefit from scale. So what we did is proactively, as we were learning about multifamily, as we were looking to source out the market, source out the property, put together the team, we started talking to our friends, our family, our network, to let them know what we were doing now, because it gave them the clarity of, oh, well, here's Jason and 𝗖𝗽, they're in bars, restaurants, working construction, they're doing the flipping, but now they're doing this multifamily. And it gave them the idea of what we were doing, prepared them for the investment we were bringing on. So when we did get to that first opportunity, we actually were able to raise that money rather quickly. right? It was not a series of weeks, it was a series of days. I think it might even been 1 or 2 days where it wasn't a ton, but it was a $700,000-800,000 raise for our first one. And we were able to do it very quickly because we had brought them basically a mock deal of like, here's the avatar of the property we're going to find. Here's what's going to look like for you and for us and for the investment. So they had time to encapsulate the idea of it. So when we brought it back, it was basically already confirmed that they wanted to be involved or had interest. So we did do that, and we've done that throughout, continue to build our investor database, because it's a lot for someone to take on. Like if I came to you today and tried to sell you some investment you have no idea about, even if it's the best thing in the world, it's a lot for you to understand and take on and make a decision if I quote unquote needed an answer today. So we've always wanted to be a parent of the investor first and say, here is what we're doing right now. This is how it's presented. What are the questions you have? So they can go back there, talk to their significant other, do more research, understand it better. So when we do bring that opportunity back, it may or may not be a fit, but at least in the front here, they've had time to review it and not have to make a rash, quick decision.
Yeah, I really love that you guys did that, because we also kind of went on the same journey about educating investors on how the whole entire process works. Because it's like, hey, give me your money and I'm going to pull it together with a bunch of other people and I'm going to go buy this large, multi-million-dollar building. People are like, what? So it is really great. And
in a different country.
For our case, in a different country, or a different state, you know what I mean? Yeah. So really great to kind of do that mock deal and really have people understand the concept.
For sure. And let's, just listening to you, I have a very close family, friends who've been, very close friends, but it almost feels like family. And they're a younger couple, kind of around our age, and they're looking to buy, they just exited one of the restaurant business they had. They're looking to get into another restaurant business. I'm like, guys, you guys need to get into real estate. So I would love to share this show with them after we're done recording and kind
Absolutely.
of putting it on, because I think they'll learn a lot. So let's talk about your first deal. This is the place you want to be in. You're involved in real estate on a smaller scale. Your wife is actually an agent, so she has a level of sophistication, but now you see this larger deal. Talk to us. At this stage, do you get some mentoring? Do you get coaching? Is the group did you partner with another group on this 94 unit? Was there an operating partner? Was there an asset manager? Was there boots on the ground? Talk to us how you manage all of that.
Sure. So we've always sought off mentorship, right? It's always been great to surround yourself with people who are doing things successfully on a high level that can give you guidance, right? That can be on all aspects of life. So many times we decide to try and do it on our own, and sure, you may get it done, but what are going to be the hiccups along the way that could be circumvented, right? If you had proper guidance. We did do the deal ourselves, right? So we did go out there, and ourselves and our investors were able to go out there, source the opportunity. We actually found it through a property manager that we really liked in the area we're working with. They knew of this opportunity. The dad had passed away. He was like in his 90s. He had built the building back in the 70s, and the kids who are now 50s and 60s had this building, but just didn't know what to do with it, right? They actually had a big single family portfolio on that they could get, like, oh, we have a bunch of houses. So they thought that was an easier route for them, these hundreds of single family homes. And they wanted to just get rid of this multifamily property, and they were operating very poorly, right? Your friends who are in the restaurant business, what we treat from the restaurant business to this is that, how is this business not performing like the others? So if you had like 10 of the same franchises and one is delinquent to the others, why is that? Like if it's think of anything, I don't know, a Chili's or something, why is this Chili's not operating well, right? Is the management, is the building, is it just set up? Are they trying to do something different? Well, the same thing here. The leasing person was not actively leasing units. You were in a very high occupancy area here, and this had completely out of norm vacancy on the property, had rents that were subservient to the property right next door. It was $100 to $125 under market, just walking across the street for a classic unit. Same style building, same everything. They just weren't being proactive to lease. The leasing person wasn't empowered to collect rent. They had to take it down to the management office. So they have a problem with collections. They weren't encapsulating a lot of the other points of other income and other things. So it was a very easy management play when we got into it, just by simply doing what the market warranted. So we're able to get into this opportunity. Went back there and negotiated the price, and we closed on it at the time about $900,000 less than the asking price. And it was at that point, for the size of properties, they wanted 3.2. We ended up closing at 2.3, but our first offer was shot down. Our first offer at the time, it made a lot of sense for what it was, but it took us follow up, a couple months later, where they got more realistic on what the market would warrant for their property. And then they were more willing to negotiate with us because the other people had offered and then just let it go out to the universe because they just moved on to the next one. So we had the consistency to just track the properties we're going after and then follow up with them if they didn't happen. And this was one of them. So we were able to close this deal and get a great opportunity on this property.
Amazing. What did you do for your debt? And also, did you bring on a key principal for the debt? Did you have your mentor, somebody kind of guiding you guys since you're going from single family into a larger multifamily? What did that look like? Because I want somebody watching who wants to get into the multifamily space to know, hey, what I need to get a coach, I need to get a mentor, I need to join a mastermind, I need to align myself with the right team members to be able to close on a larger deal.
So all those are viable options, right? And so they, as we said, mentorship, like all those parts are very important. Luckily enough, we were able to sign on that debt. We were able to be our own sponsor for that point. So we were the only general partners. We were the general partners on the project right there. So everybody go in there and get the loan. It was an agency debt. I think at the time it was a Fannie 7/6 ARM, which I don't even know if they're offering anymore at this point. It was a 7/6 ARM. For which we got into the property. I believe we even rolled some of the CapEx into it, which was just amazing. It wasn't a ton of heavy lifting. A lot of it, building was in great shape. They had taken a great care of the property. They just had not done a good thing cultivating really a great place to live and just putting in proper management process. So it wasn't a ton of deferred maintenance here. We had to change out some boilers. There were some things here that we updated more than having to do. It was based on choice. So we were able to sign that loan, got that deal closed. Within about 13 months, we were able to refi and get the majority of investors' capital out, which was fantastic for a first opportunity there. Investors were psyched. And then about 2.5 years in, the market, it was actually right before COVID, the market had taken a great turn. So we capitalized on the market and sold it at an incredible profit for us and our investors. So it was a really nice project out of the gate.
Tremendous.
Yeah, I was just because you went through a full cycle right there.
Yeah, absolutely. Something we're looking at.
Happy investors, and they want to keep deploying capital.
Now, with CPI Capital, kind of our journey is also to be on the operational side, like you guys were as a sole GP. We're looking to kind of be the sole GP or the lead GP, but we currently are partnering with active operators on US side as our boots on the ground, just because of the geographical items. And currently we've brought on an asset manager on our team who's going to be looking after the communications and connections with all the brokers and flying out to assets and doing all the due diligence necessary to get a deal flow going on for us. Are you guys currently allocating capital or partnering as co-sponsors with other general partners, or the business model is to be either the sole or the lead GP on your deals?
We're typically always the lead GP. We do partner with others, but we at that front, there's a lot of points, especially if we're going to bring in investor capital, that we want to have a portion of driving the dynamics of the deal, right? For us, asset management is a key piece of the puzzle that we put a lot of reliance on. As you know, you just spoke about it here, is that a lot of emphasis is put on, of course, finding and closing the deal. And then it's almost like you don't hear about the deal anymore. And then all of a sudden there's the next 3, 4, 5, 6, 7, 8 years of the deal actually happening, where that's where the work comes in. So we want to make sure that we're highly in tune with the operations of the deal, how the deal is, of course, sizing up to the pro forma that we've mapped out here, and then working with the team to make sure this repositioning plan can be accomplished.
Got it. And your asset management is in-house, or do you guys have any plans with property manager? What do you do currently? Do you partner with property management firms to look after your properties? Are you any plans to be vertically integrated and do it in-house? Talk to us about actual property management.
Sure. So asset management, we handle. Property management, we use third-party property management in select locations here. Main thoroughways right now, we're in Louisville, Atlanta, and Nashville. So we have different property management companies in each area right there. We have on our agenda about vertical integration on the property management side, but it's going to take to get to a certain unit count before we will entertain doing that. So right now, we're very happy with the process and the approach we have with our management partners. It's a very important piece of the puzzle, right? Because I can have the best plan in the world, but if I don't have the team to implement the plan, then it's all for naught, right? So we put a lot of emphasis making sure the team is in a good direction on the property and then powering it through from there.
That's fantastic, Jason. And what markets are you guys bullish about right now?
Really, Nashville. We love Nashville, MSA of Nashville, all the submarkets around there. Like a lot. Just closed right outside of Atlanta, 2 properties in Decatur, Georgia. We are now under contract on another one down there. So Nashville, Atlanta, the Southeast, there's just so much energy going here. There's a lot of runway. Still a deficit for housing in need here. So there's a lot of drivers pushing in the right way here.
Awesome. And I mean, as you know, the interest rates are, rising. We're in a, increasing interest rate environment. What are your thoughts? Are you looking at deals? Are you underwriting it differently? Are you cognizant that the rates are increasing? And what are you putting into place, for kind of to adjust the risk on your investments currently?
You want to have the multiple opportunities for exit strategy. Typically, to the point here, if you get tied into a deal and you only have one exit and it's tied to a certain timeline, you're at a lot of risk that's really associated to the market, right? So noting here that interest rates, even over the last 30 days, have changed dramatically. It's just being realistic with where your exit points are in the future, whether it's on a refinance or not, but looking at longer term loans, getting fixed rate now, even as not the same fixed rate we saw 2 or 3 months ago, giving us the opportunity to have certainty and clarity in where we're going. So we're not caught by surprise 2 or 3 years out here. So we are still looking, underwriting, actively reviewing deals. We think the multifamily space still has a lot of runway in it, but we are just being very careful in the type of debt we're basically putting on the project, so we're not stuck in a rough position where the debt itself is dictating our business plan and we can dictate our business plan.
Yeah, and the interest rates are rising, but also so are the rents. You can see a lot of data out there showing rents, and then incomes are also somewhat rising as well. But
the rent growth has been substantial.
Definitely, and the job growth as well in certain regions. Okay, awesome.
Follow the numbers.
Yeah, you talk about having mentorship, joining mastermind groups, immersing yourself within this space to learn everything about it. You guys happen to have a mastermind group, so let's discuss 7-figure multifamily.
Sure. The one piece, I'll just track back to your comment there, is that I think on average last year in the US, we're at like 14% rent growth and 3% vacancy, right? So that trends to a lot of numbers here. However, that doesn't look to sustain. We look to be about 7% on this year. So you just have to make sure you're in your underwriting here, that one, you're making clear path forward in terms of what's a realistic rent growth, and then also understanding, is the rent growth I'm writing in my project realistic with my current tenant base? Sometimes I'll see a big rent jump here, assuming that everything is stay status quo. But if you're raising rents $500 a month on your tenant base, there's a lot of tenants who aren't going to be able to carry that weight, right? So you may be transitioning the property a lot. So you have to account for that on the backside here to say, okay, well, is this going to hedge, of course, on my vacancy level of what's going to happen here on the property when we do this dramatic jump? Or do we have to think of another bridge component of potentially just doing a separate part for releases compared to new people coming in the market here, or new market leases? I've been seeing that a lot here, where we're making assumptions, assuming that the narrative keeps running 15% rent growth every year forever. But then people are going to be priced out of everything. They already have a hard time to pay for gas and groceries, let alone having their rent take up about 80% of their income. Yes. So I think that's a big piece to play in there with the debt side of it. 7-figure multifamily. Actually, our first mastermind was called 7-figure flipping. And that was one when we first got into flipping. We looked for a mastermind, looked for mentorship. And this was just tremendous group together. It was the first run out, and just a lot of people who are now high-level performers out there got together and just really saw that the ability to have other like-minded people around you, which you could just bounce ideas off, learn from each other. All this just benefited the group, not only for each of us, but collectively as well. The same partners there, as we moved into the multifamily space, became investors into our projects and just kept understanding what we were doing and just tracking us. And we started doing coaching, Peely and myself, on our own, helping individuals. But we were capped just by us and our time, and not having the bandwidth to be able to put together the mentorship program in full to encapsulate such a large audience. Well, 7-figure flipping, run by Bill Allen, him, Peely, myself, and Chad King, we were partners going forward on a few projects for multifamily. We decided to take that and open up 7-figure multifamily to give and help investors either go from where they are today in their current job, whether they're working as a dentist or a lawyer or transition from other real estate aspects, flipping or wholesaling into large multifamily, giving them the guidance, the steps, the proven path forward, how they can do this successfully, just like we did, transitioning from where you are to where you want to be.
Passively?
That's been tremendous.
Passively.
We're about a year out, coming up in June.
Passively or actively?
Actively. So we do have passive investors in the group too, who are looking to be around other people as part to come in there. Mainly the majority, let's say 90 to 95% are active investors who are looking to have some active role in multifamily, but understand the steps forward, right? So what is a proven process here to understand how to know the terms, how to learn the market, how to put together the team, how to raise capital, how to underwrite deals, how to make offers, how to close on properties, run deals accordingly, right? So we work on that collectively to help put people in the right path forward so they can take the steps to complete the goals they're after.
Nice.
Really,
awesome.
really cool. Yeah, don't reinvent the wheel. Join a group like Seven Figure Multifamily, and then
awesome.
do it the
Awesome. And how can people get in touch with you guys, particularly for Seven Figure Multifamily?
Yeah.
Sure. So you can go over to yarusiholdings.com. On there, you'll see Seven Figure Multifamily link, or go to the number 7 and then the words figure multifamily, sevenfiguremultifamily.com, and you can find direct link there.
Awesome.
Okay.
Awesome.
Right on.
All right.
Yeah.
Let's get to the most important.
Yeah. We wanted to get to the most important question of all, and
Awesome.
That's your business partner also being your life partner. So let's discuss this dynamic, as it's a common question that's asked to us. And yeah, we would love to hear about how we understand you worked with your wife for years before they actually started their business together. But talk to us about that.
Yeah, this is a common question asked from us, but it's also a point of discussion. And in some cases has actually been, there's a lot of positives. I mean, you have your best friend next to you. We go to the gym together. We travel together. We're building a company together. We have a YouTube show together. We do everything together, right? But from the outside in, sometimes it might seem overwhelming because some people can't, they're married, but in some ways they can't stand each other. So it's unfortunate. But in our case, we love hanging out. We love doing everything together, It
actually creates better communication running a business as well with your spouse.
But for our investors, but some investors who were a bit concerned because we're married, but we're also managing a real estate private equity firm, that like, hey, what if there's a conflict? So
when we do get some interesting questions come our way.
We had to talk to our legal team and put put items in place for if there is a disagreement between us, it doesn't affect the syndicated investment. So that was very important. But yeah, talk to us about I mean it was kind of a long question, but it's more kind of a discussion. Talk to us about the dynamic between you and your wife. How do you guys your personal life? You have children. We don't have any children, but how do you manage everything? How do you get everything going? And talk to us about the good, the bad, and everything.
The good, the bad, the
Fair enough. So, of course, 𝗖𝗽 and myself, we're partners here at Yarusi Holdings, and the question stems a lot is like, how do you work together? And the easiest answer is that, well, it became not so much how do we work together, but how do we be a couple together, right? Because we started working together, right? We knew just working together. So we worked in a lot of very fast-paced environments. I mean, the one bar that we ran, we'd have 20,000 people on a Saturday, so it was pretty busy, right? So it was not something apart. So we're used to working in stressful, fast-paced environments before we even became a couple, right? So the learning side was more on being a couple relationship. But what's helped us, we'll stay sane, but also just stay on path here, is that most partnerships, right? So I had one partnership I can really call on, back when I first started a restaurant years ago, where it went the wrong way and we were friends first, but where it came up here is that the communication out of the gate was not, it was those uncomfortable, hard conversations that you should have at every point, but you don't have because it's uncomfortable. But having it then is so much better than having it when something arises, right? So the part where usually I see a husband and wife who are having some kind of disruption or dispute is that they just haven't asked the question of each other, is that, what are you looking for, right? So we'll go speak at an event. We were just at one speaking, and the person said, I'm working so hard to make this business go, and my wife's just not on board, right? And I'm like, okay, well, have you asked her if this was what she wants, right? Because in your mind, you might be working and doing all these great things that you think are great for the family, but she may just want you to be present at dinner with the kids. right? And because you haven't asked that question, you don't know the result. You're just assuming in your mind that this is the answer, right? So the path forward becomes unclear because you're making the assumption in your mind of what the answer is without actually asking the question of the other person. So for us, it's just when things are happening, it was like, let's say, take COVID, right? So we had a talk before that if something came up that was just a hard event or something that would just change a point, she would go all kids and I would go all business, right? And so when COVID did, that was our direction. She went all kids, I went all business, right? And that was the point here of just having clarity of how to make a choice out of the gate when something comes up. And we do have 3 awesome, amazing kids, and they deserve our loving attention and time. So we don't ever have a point where we're trying to balance. We're trying to be present. When it's work time, be present, right? When I'm here with you, I'm being present. I'm not, worrying about the kids. I hope they're, having fun at school. But when I'm with the kids, I'm trying to make sure I'm having focused time with them and not worried about, I don't know, sending out an email. Right. And are we perfect on every environment? No, but that's constantly approach, is being clear with each other about the goal. When things seem to go off right, stop, take a moment, take a deep breath, right? We're not doing brain surgery right now, and be clear with those questions. Right. And that's always been the path forward, because the thing with any partnerships is they go wrong when people have different expectations of what they think the other one's doing, because they're interpreting what they think the goal should be without actually asking the question.
Amazing.
You were going to say something?
No, I was just going to say communication is key.
No, for sure. So now, great. That's great. So you guys can say, hey, if something comes up, I'm going to handle this part of the boat. You're going to handle this part of the boat. Great. But talk to us about business, because in our case, there are significant differences and conflicts and the clashes that take place, because we're both very strong-minded. We're both very focused individuals, and at times we want a different direction or different strategy or different kind of move. I mean, we buy real estate assets. That's essentially what it is. We buy real estate assets. We partner with investors. It's a very sensitive type of business. And there's a lot of decisions that are made, and depending on our decisions, that's our track record. That's, that kind of lays the ground for the future. How do you guys go about, for example, on that side of things, as far as buying a property? Is it a right time to buy? Is this the right property? Is this strategy currently, the marketing strategy, the right strategy? Is it right to bring this person on as an employee? How do you manage all of that?
Sure. So there's collective decisions, and then there's each of us decisions, right? And at a certain point, there's a trust level between us that we're each making the best sense forward. Because, right, we want to create a narrative that we create a great company that can not only benefit us by giving us time back with our family, but we want to make better communities, and that better community makes better places for people to live, right? Which ultimately trends back to the property operating better, which ultimately creates more revenue for the property, which creates a bigger bottom line, which creates better results for our investors, right? And so if we look at that approach here, is that's the narrative, that's the goal, right? That's the beacon out there, the shining light for which we're going after. So are our decisions tracking on that goal? And if they're not, then we have to recount why not? Why are we making this decision? So typically there's a lot of things from the property side that I'm making a straight decision without having to confer or speak with Peely, right? She does a lot in the capital side, a lot in the investor side. I handle more on the property detail side, project side, asset management side, right? And so we have our clear path forward, and we come together when we need to on bigger decisions, right? But at the time of our purpose forward, we make sure, are we on that point? Is this making a better community from top down through to our investors?
All right. So kind of one more conversation before we get to the next segment of our show. Yes. And our title of our show is Health, Wealth, and Happiness. And now I'm just looking at you. You seem like a pretty fit guy. I can see you're pretty chiseled over there. How do you, now your wife as well, I've seen you guys on a bunch of different places. You guys both seem like you're in great shape. Most times people get married, they're busy business. The first thing that gets hurt is their physical appearance, is their body fat percentage. It's other things, is drinking. Maybe they start drinking more. How do you guys manage being physically fit, your diet, all that other stuff, which then also makes you better business people, but also happier people? How do you manage your health and diet and all that great stuff?
It became really clear once we started having kids that, when they wake up, they're not going to be like, okay, we'll be on hold until you're ready, Daddy. And so we want to get to the point where we can, again, get back into our day. And how do you do that? You get up early and you set the stage for your day. Just like Avery, you were saying, you get up at 4:30, I get up at 4:32, 4, 3, 2, 1, get up and go, right? Get out of the gate, get going, get yourself on board, get yourself clear and ready for the day. So when the kids get up, you can spend time with them. So I'll get up, have a glass of water, drink coffee, meditate, work out. By that time, some of the kids may or may not have been rising up from there. I'll hang out with them. Peely can go do her things. I'll take the kids to school. And in that part, we've each had time to get back our focus for the day. So as we get into our day, we're not worried about the things we didn't do, right? We've created small wins each day and stacked on wins that can continue to go forward, right? So it wasn't so much saying, it's like a non-negotiable, right? Get up early, work out. Like, this is what I do. Now, there's certain time the kid gets up at 3 a.m. on other points. Okay, fine. It is what it is. But our point for us is the path forward. Get up, set the narrative for the day, and then you can control back the day of everything that comes from there.
Yeah, I love that. You got to take care of yourself first, and then you can easily take care of everybody else.
Jason, you seem very regimented and very focused. Where do you get that from? Were you ever part of the army? Was your dad someone who instilled this in you? Like, how did you get that kind of, this is the time I'm waking up, this is when I'm working out, like very much, regimented?
Yeah, strict regimen.
Yeah, I wasn't. My dad was in the army, right? So my dad was in Vietnam, other points from there. He's very stubborn Italian. I think I'd taken that same part, but it becomes a conversation with yourself. Like, if you're not happy where you are, then doing the same thing is not going to get you to where you want to be, right? And there's a certain point where you have to change the narrative, right? Eliminate things that just don't make sense and do things consistently that fit for you, right? Like, I got up this morning and worked out. Did I want to? No, but I did. And that's most of life, is that there's times when you don't want to, but it's not like kindergarten where people are telling you what to do and you're doing this thing like, okay, we're going to get in line now and go walk outside. Like, no one's here to show up to make life different for you, right? It's you versus you. So you're going to get up and you're either going to say, it's like you get into this magical world. You can be in your 20s, 30s, 40s, 50s, and you just decide not to do something today. Oh, I don't want to eat well. Okay, well, just, you could just not eat well, right? That's just the life you can choose today. And so that can be fine. Do you want to do that? Okay, fine. But I don't. I want to make sure that I make a decision that's going to help me, and at certain points continue to build upon what works, right? So, I pretty much kind of wear the same kind of things, like t-shirt and jeans every day. I pretty much kind of eat the same thing. Like, I don't go too far off the rails here, because I spend, there's not enough time if I'm going to let my time being spent on things that ultimately I'm not going to remember. It just don't matter, right? Like, oh, what are we going to have for dinner tonight? Like, it doesn't matter. Just let's just go, so we can have some time back, whether it be, for multifamily, whether it be for more time with the kids, for Peely and I, right? We're constantly working on that, right? A piece of the puzzle now is we live somewhere new now. So we had a fantastic nanny. She actually went over to Kuwait. She's a part of the reserve, so she's doing some time over there. So we've had a couple months here where we're finding a new team member there. But what's been lacking is that Peely and I don't have much time where it's just her and I, right? And so we've been looking to find that avenue. It's important to us. But again, like, the trust level of having someone around the kids when you're in a brand new spot, we're trying to make sure we have that. So now we have that again. So we're able to put that back in there, right? And so there's a piece of the puzzle where it's not always perfect, but we keep adapting to make it, right? And so that's been a big goal for us moving forward.
Yeah.
Like
and what I took away from that was also this mindset, this idea of being proactive rather than being reactive to life, right? It's kind of a important thing. So awesome. Love chatting with you.
Yeah, love listening to you.
All right. So one more last question before, it's a quick question, before moving on to our 10 championship rounds to financial freedom. What is your number one advice to a passive investor looking to start investing in syndication or real estate private equity, as we like to call it?
Part of it, you have to like the person that you're investing with if you're investing into a person, right? Like, it doesn't matter if the opportunities are good or not, but you're going to be, some of our opportunities are 10-year opportunities, right? So I want to make sure they like what you're doing and they're in a position that they have clear goals, right? Do they want short-term plays? Do they want long-term plays? Are they looking for cash flow driven? Are they looking for appreciation? Are they looking for tax benefits? What are you looking for? Because we need to have that answer for you to see. I don't want you to be one of our investors if it's not going to fit your objectives here. So have clear guidance and come with great questions. We want to answer questions for you. So be clear with your objectives here, so you can make sure not only is the investment right, but also the investment group you're investing with correct.
Amazing. Great answer. All right, let's do this.
Here we go. 10 championship rounds to financial freedom. Jason, whatever comes top of mind, here's the first question. Number one, who is the most influential person in your life?
My wife.
All right. Beautiful.
I have a feeling all our guests are scared of their wives, because everybody just says their wife all the time. All right.
I love it. All right. What is the number one book you recommend?
Oh, man. Always the last one I'm reading. I'm reading Gary V's 12.5 right now.
All right.
Awesome.
Okay. Jason, if you had the opportunity to travel back in time, what advice would you give your younger self?
Don't worry about things that have a less than 1% chance of happening. Spend time just making the most of what you're doing right now.
All right, on. All right. What is the best investment you've ever made?
It would harbor between, of course, maybe just moving the family, just changing it, just because, why not? And also just continued education.
Moving geographically, you mean?
Yeah, just saying we get stuck to the point where, like, you just like, well, we have to stay here. But when you really say, like, what's the worst thing that could happen, right? Maybe we'll move back. Like, it doesn't matter. Like, go try something else. You find that there's so many different parts of the process that you discover just by doing something that, if you were to say 3 years ago to me, you'd be in Tennessee, I'd be like, huh? No, I wouldn't. But here I am.
Just do it.
Awesome. They must have really good, like, Southern food over there in Tennessee.
Oh, they sure do.
Oh,
yep.
Gosh. Oh, there we go. Nice.
Oxtail, my favorite. Okay.
His favorite. All right, Jason, what's the worst investment you've ever made, and what lessons did you learn from it?
Worst investment is typically, I would say it would be not so much, the restaurant did fine. I'll say that partnership, I lost a friendship over it. We were supposed to be more of a silent partner after getting operational, and he was making poor choices and then wanted help because he had put his part. But the other partners and myself were already into very busy activities, couldn't help. But it ruined the friendship, the friendship is always important, which is why it's best to have the difficult conversations before starting, because that difficult conversation is really easy then compared to the difficult conversations you'll have in the future.
All right. Okay, next question. How much would you need in the bank to retire today? What's your number?
Honestly, I don't know. So I don't know what it would be, I guess, because it goes that point. Like, I don't see like, my dad's still working. Like, I don't know about, like, the word retirement, like what that really means or comes off to me. So I don't know if there's a point where I'd be like, I'd stop doing something, because then in my mind, I'd like atrophy and die. So on that front, I don't know if I have a retirement number, because I don't know quite what that would mean to me. Got it.
You love what you do. Why retire, right?
Yeah, absolutely. Okay, if you could have dinner with someone dead or alive, who would it be?
Oh, that's a good question. Someone dead or alive, easy one would say, Warren Buffett. Gary Vee would be another one. Ben Franklin, right? There's a lot of interesting people you could talk to there. So I'll put those three, just because that's a good question.
Perfect.
Awesome. At the same table.
Yeah,
at the same table, right? There you go. That would be Warren, a great conversation.
All right. If you weren't doing what you're doing today, what would you be doing now?
Oh, if I wasn't doing what I was doing today, what would I be doing now? I actually love the restaurant business. I thought it was a lot of fun, right? I always open a brew pub. I never go back to it, but that's what comes to mind. Or I like anything to do with some kind of fitness, fitness activities. So maybe I'd be some kind of, I like seeing people do better for themselves. So maybe I'd be some kind of like personal trainer. I don't know. Yeah.
I was guessing he's gonna say professional triathlonist.
Oh yeah, there you go.
It doesn't work. Triathlonist. Maybe that is a word. Okay.
Nice. Okay, my favorite question: book smarts or street smarts?
I think street smarts carry a lot more weight.
All right. Okay, last question, Jason. If you had $1 million cash and you had to make one investment today, what would it be?
And I'm going to emphasize on this question, very particular, right? It's a very particular question. If you had $1 million cash and you had to make one investment, and that investment has to be done today, what would you invest it into?
So You could put it in.
You have to deploy it today. You have to deploy all the capital today.
Do I have a real estate investment that's ready to go, or I know I'm kind of switching.
Well, not really. Yeah. Not really. No.
Easiest point, you could put something into like and this is going to be off topic, but there's like Anchor Protocol, which is like a Terra platform that you can get a 20% yield on your money right there. So you basically just transition it over to crypto, put it in there, get 20% on your money. That's a stable coin right there. And you have 200,000 free a year that you can dispense elsewhere. Other paths from there, there's a lot of platforms out there where you can get yourself into real estate and just have stable yield. So I'd look for something for a yield play where I could get cash flow off to it and potentially still get the benefits if there was a real estate project for me. Or if I had that cash available, then go into something like crypto where I'd get a big upside in the yield from it.
Right on.
Awesome.
Super cool. Okay, Jason.
I think we already asked how people can get in touch with you. Maybe you can say it one more time if you don't mind.
Sure. Yeah, Yarusi Holdings, everything about us you can find over there. So YARUSIholdings.com. You can find me across LinkedIn, Jason Yarusi.
Fantastic. I look forward to meeting 𝗼𝗫.
Absolutely.
Yes, we should have her on our show. All right, man. Awesome. Really appreciate it.
Thank you.
Yeah, thank you so much for coming. What a great interview.
Absolutely.
Thank you so much.